Welcome back to the Crypto Expert, where we bring you the latest news and updates on the fascinating world of cryptocurrencies. You'll learn the connection between digital currencies and the government. 2023 doesn't seem as bright as people thought it would. So buckle up and prepare for a mind-blowing ride as we unveil something that might impact the crypto world. Crypto investors are looking forward to a better 2023, but the government had different plans. They started a massive crackdown on the crypto industry, which was unexpected. The SEC slapped fines on crypto lending firms in January, and federal banking officials made statements designed to make it harder for crypto companies to participate in mainstream finance. Things have really sped up in the last few months. State and federal regulations are putting the heat on two big crypto companies. One being a super popular exchange where folks buy and sell digital coins. The SEC even settled with the exchange and imposed a fine on crypto promoter. But that's not all. They also sued a startup that created its digital coins. Regulators are reacting to the market chaos that caused big crypto companies to file for bankruptcy last year, costing investors heaps of money. It seems like they're gearing up for a long legal battle. The enforcement actions show that the government is becoming increasingly concerned about the potential dangers of cryptocurrencies, an experimental technology that lets people trade in new and unusual ways. According to Kristen Smith, the executive director of the Blockchain Association, she likes to call the recent regulatory actions against crypto carpet bombing. For a long time, regulators were under fire for not keeping up with the rapidly expanding crypto industry, which has grown into a massive multi-trillion-dollar business. But things took a turn in November when the FTX crypto exchange, once considered one of the most trustworthy companies in the industry, collapsed almost out of nowhere. Its founder, Sam Bankman-Fried, was arrested and accused of pulling off a massive fraud scheme that had been going on for years. The situation has forced authorities to take immediate action. Crypto businesses have been operating in legal limbo, with lawmakers and public servants discussing their regulatory classification. The industry has grown faster than the federal agencies that monitor other financial sectors, such as traditional banks and publicly traded firms, which move slowly. So FTX filed for bankruptcy in November, and then everything went haywire for Mr. Bankman-Fried and his top dogs as the SEC, the Justice Department, and the Commodity Futures Trading Commission all came after them. But things got even crazier last month when the SEC hit up Nexo, a crypto lender, with a fine of $45 million and busted Genesis, one of its rivals, for offering unregistered securities. Also, the SEC came down on the Kraken crypto exchange and banned one of their popular investment products from being sold in the US. That's a huge deal that could shake up the whole industry. And they didn't stop there. They also slapped Paxos, a company that makes stable coins tied to the US dollar, with a warning that they might get sued for messing with securities laws. The SEC went after Terraform Labs, the folks who made Luna and Terra USD, digital coins that went belly up last year and caused many problems for the crypto market. And get this, the agency also revealed that retired NBA player Paul Pierce got caught marketing a cryptocurrency without doing the right disclosures and had to cough up $1.4 million to settle the charges. It's not just the SEC cracking down on crypto. Three big-shot financial regulators sent a letter to banks in January telling them they must be careful with dealing with digital currencies. And as if that wasn't enough, Custodia Bank, a crypto company, tried to join the Federal Reserve's payment system but got shut down in January. The government's crackdown on crypto is making a lot of people in the industry pretty upset and nervous. Some of its supporters even call it Operation Choke Point 2.0, which refers to a law enforcement campaign from the 2010s to stop banks from doing business with certain types of companies. According to a lawyer familiar with the industry, he's been telling crypto executives to brace themselves for up to 5 years of battling it out with the government in some serious and pricey litigation. Crypto companies have been sharing insider info on which law firms are best equipped to handle government lawsuits. But the lawyer didn't want to give out any names. Paul Grewal, who is the top legal guy at Coinbase, the biggest crypto exchange in the US, said that the government's recent moves against crypto seem like a big team effort and are all based on the same belief that the whole industry needs to be put in check. He went on to say that it's crucial for the crypto world to get ready for a lengthy battle. The SEC and the Federal Deposit Insurance Corporation had nothing to say about it when they were asked for their 2 cents. And when other banking regulators were asked for their thoughts, they didn't even bother to respond. Since the start, regulators have been keeping a close eye on the crypto industry. And in 2021, as the market went crazy and shot up to all-time highs, Washington officials started raising serious concerns. Gary Gensler, head honcho of the SEC, believes that almost all cryptocurrencies should be treated as securities like stocks traded on the market and face the same strict rules and regulations. His office spent months gathering evidence against crypto companies, some of which are now being taken to court. While all of this was going on, the crypto industry was also building relationships with supporters in Congress who were trying to pass laws that would make it simpler for these companies to introduce all kinds of new and risky products in the US. Since FTX went down the tubes, the tone of those conversations has shifted. Someone involved in those behind-the-scenes talks says that Capitol Hill staff members who were once all excited about collaborating with crypto companies are now feeling doubtful and backing up Mr. Gensler's crackdown efforts. The SEC recently hammered out a $30 million deal with Kraken, one of the biggest US exchanges, and it freaked out the crypto crowd. Kraken had to promise to stop providing a service called staking, which lets investors make money for their crypto savings. And this has been a major money maker for the industry. Crypto nerds are worried that the SEC will go after other crypto companies and put a stop to similar services. Back in February, the New York Department of Financial Services told Paxos to halt the issuance of BUSD, a stablecoin tied to Binance, the biggest crypto exchange in the world. That same day, Paxos announced that it had received a letter from the SEC warning them they could potentially face securities charges due to their involvement with BUSD. Jason Weinstein, a lawyer at Steptoe & Johnson who focuses on crypto, said that it looks like federal agencies in the US are having a bit of an arms race, each trying to prove that they're the toughest regulator when it comes to crypto. There are a bunch of different officials who all seem to be trying to take charge of the same situation. A lot of the recent moves by regulators have made people worried that crypto companies will struggle to connect with regular finance entities. For example, in January, the Federal Reserve, the Federal Deposit Insurance Corporation, and the Office of the Comptroller of the Currency issued a joint statement that painted a pretty scary picture of what can happen when traditional banks get mixed up with crypto. Nick Carter, an investor in the crypto space, stated in a blog post that the US government's efforts against the industry are quite evident. He also warned that there's a possibility that exchanges may face a complete ban from using the conventional banking system. As more and more people have been predicting doom and gloom, crypto bigwigs have started slamming the SEC on Twitter. For instance, after Kraken struck a deal with the agency, the company's founder, Jesse Powell, shared a rude meme targeting Mr. Gensler. Even though it was eventually taken down, Kraken didn't bother to respond to any questions about it. According to Grewal, the legal head at Coinbase, things are definitely different right now. He said that his team is ready to do whatever it takes to get the rules regarding crypto clarified. The company is willing to keep engaging with regulators for as long as it takes. This was the Crypto Experts on what the government's plans on cryptocurrencies are. What do you think about the regulations? Are they fair? Comment your thoughts below. Until the next video,